Right, and I'm back. Wow, that was a great little sort of break there. Wait for, I think it was about 2 weeks or so, just touch over 2 weeks now, so it gave myself a bit of a day of transition, sort of coming back to stuff, but definitely needed, and that chance to sort of recharge, reset, sort of, just level the head a little bit. I think that's the big thing, and that's one thing I found sort of, obviously trading this stuff so much, it burns you out. It really does, and little bit of a break was good to, as I said, just clear the mind, recharge, reset, and hopefully get back to things here. But look, honestly, sort of while I was away, I would have thought that the market was a little bit quieter, only just for the fact that it's US summer, Euro summer, this kind of stuff here. But of course, these markets never stop. But very much sort of like the tariff stuff still kicking on. You've got the RBA doing their thing, the Fed doing their thing. Yes, so yeah, it was like I had a couple of open positions, and some went okay, some not so okay, but I mean, look, that's the name of the game, and we just got to let those things ride. But now it gives us a chance to sort of get back up to speed, and obviously sort of have a look at how these sort of things have really played out. So we'll probably try and keep it a little bit quick just for the first one back, because there's no point trying to sort of cover 2 weeks of data. Um, in a sort of like 30-minute sort of analysis. But what it will kind of do is look at what we've sort of had last couple of days, because there's been some bigger moves of stuff. I mean, copper, oof, 20, well, I saw it was 21%, 21% in a matter of minutes, and that we thought that big breakout at 17% a couple of weeks ago was huge. Well, like these things do, when you see the bigger move, it just makes those ones look a little bit, just that candle, was it? This was a big move to that for copper, but of course, it's been a big week of data in that already. So just to sort of bring myself a little bit up to speed at that as well. Look, we had non-farm payrolls. Wow, that was a decent beat. Revised up, negative 23, negative 33, up to negative 33, back into the positive here. Quite a strong jump as well. Like, even if it was just to come in as expected, 77 up to 104. What have they been ticking in at? Yeah, okay, so it's first one that sort of had above 100 in a couple of months and that. But strong beat on that front there. We had CPI Aussie come in, bang down into the band there, very much into the band, I should say, actually. And this is the thing, like I saw with Aussie, I thought the reaction would have been a little bit stronger because this is the big thing that they've been talking about, or Bullock's been talking about, the quarter on quarter and all this kind of stuff. So look, I'll get to that when I get to the charts. Look, we had Jolts. Jolts missed a little bit here, so that's a one tick in the negative camp, a little bit of a slower start as I see for the data there. Look, I'm going to skip over things that like CADs because I don't really sort of follow CAD too much. We've got PMI for China. Nothing really sort of flashy. A little bit of a slowing for this one here. BOJ held rates there. I'll get to this a little bit later. Not that I cover sort of yen so much in these things, but kind of the situation. Look, I mean, I may as well say it now. I saw some level of sort of insolvencies actually sort of on the rise through last sort of, I think the last years and that. Probably should know my data a little bit better if I'm going to quote it, but it was saying that insolvencies was on the rise and that over in Japan and that. So, which you know what I mean, like it kind of prevents the BOJ from. Look, it doesn't prevent, but it definitely puts a big sort of cross against it. The idea of them hiking rates. I think this is a big thing because it's sort of like obviously they're negative, or they've been sort of negative for so long that sort of once you get used to those sort of levels, it's very hard to sort of get back up because they're really only puttering along. So it seems, and that sort of with these kind of lower levels, if you sort of crank them up, well, yeah, it's obviously not a recipe for anything necessarily great. But anyway, so they held rates over there. We had FOMC, they held rates as well. I just skipped over this a second ago. They held rates over here as well. The press conference with this one that sort of seemed that Powell's came out sort of swinging, which I think is good because we've heard so much from a couple of these other people, that Waller person and Bowman and that sort of saying, oh, they're going to cut in July, cut in July. And that the market really rattled the market every single time they opened their yaps and that, and I was just like, oh, but when US dollar would sell off and all this kind of stuff. So it's good to see sort of the idea of Powell coming out and sort of saying that, hey, look, bang, we're doing this, and I think it was sort of like I didn't see. the wording exactly, but along the lines of you're lucky that we're not sort of raising raising rates, which is complete stark contrast to these guys saying, hey, look, we should cut. Yeah, that's great, good opinion. Well, it didn't happen. They held rates. And, with a couple of these other bits of data, as you're seeing, jobs are a little bit stronger. Now, ADP isn't always a good indicator for NFP because that brings us up to sort of where we are tonight. We've got 147 from last month. We're looking at 106, so looking like a little bit of a slowdown. ADP was obviously a shocker last month, and everyone was expecting to see something similar with NFP, and we didn't. We actually got a big beat last month with NFP. So as you can see here, expectation was 144, and we came in at 147. So, it's not really a good sort of precursor to say, okay, well, ADP's up, maybe NFP will be up as well. Excuse me. And I don't think it's enough to even sort of say that, hey, look, they're inverse to each other or anything along those lines. So I would be surprised. Not to be surprised. I would sort of like, I don't think that's going to be any indicator as to what we're going to get tonight. But I think a strong number here is really going to put a bit of fire underneath the DXY. And we're going to sort of, I'll have a look at that in the charts in a moment, because, that's at some good bottoming levels, and we are seeing this thing sort of continue to grind higher and higher and higher. So we'll see how this sort of plays out, and obviously how it's going to affect the other markets. But that's obviously the big ticket one on the sort of cards today. Through this, well, we've got PPI quarter on quarter. No, look, it's not really something that the market takes too much notice of. Caxton PMI for China, like a couple of bits of data which may sort of move things a little bit, but again, I just think that everything is just it's the sort of the US dollar which is really just driving everything in the market at the moment. One that I did sort of tick over here just quickly was the sort of unemployment claims, which seems to be dropping. And this is what I'm saying, that US dollar's been bashed for so long. Tariffs was the big driver of it all, the uncertainty, then the idea that it was weak data with like at the same time in conjunction with that. But the jobs are actually looking fairly decent. You got unemployment claims coming down. You got stronger beats in NFP last month, ADP this month. We could see some sort of thing where the tariffs don't really seem to affect things as much, sort of in terms of sort of what I mean, sort of, well, I don't know, not so much to sort of say that it's not affecting things, but inflation is what Powell constantly seems to go on about in regards to the tariffs. But I think the uncertainty shock of the tariffs seems to be waning, and that's fine. Look, this is how the market moves. It's the same thing when these wars first break out, and uncertainty, scared, okay, risk off, people act like that. Obviously in this case, risk off. US dollar is a risk off sort of thing, but that was still being sold. But so the point is that they were moving away from US dollar based on this sort of uncertainty. Maybe now we sort of see that sort of, people go, oh, don't wait, look, it's not as bad as we thought it would be, which is exactly the same kind of fallout that you see with wars and like that, with the market reaction to when war happens. And, at first everyone freaks out, and then people start to go, okay, whatever. And then, as we see now, with, more recently when they were bombing Iran and all this kind of stuff, the market just doesn't really care. It moves on very quickly. It's funny because I think people from outside the market kind of think like, oh my God, how could you not care and all this? And I think they miss the point with it all. Well, actually, no, I think they do. They miss the point. The market isn't here to care about your feelings on situations. It's there to sort of show sort of collective reaction to these bits of data, and you know what I mean. It's they're separate issues with it all. Anyway, whatever. I'm not here to talk about that kind of stuff. Still got ISM manufacturing coming in here as well. Again, one of these ones, 50 is the baseline here. Small expectation to the top side. So I'm really sort of kind of watching for the stronger US data sort of coming out. And if we see this stuff sort of continue to show some strength, if we see some, reluctance to sort of move down with the sort of job numbers, I think this could continue to put a little bit of a bid under the US dollar, at least for now. So we'll have to sort of see how this one sort of plays out. But anyway, so that's just a little bit of the data going on here at the moment. Let's have a look at the charts, have a look at how things actually sort of played out, sort of from this time away onto some levels that we can see here. So it's moving incredibly slow for some reason. Right. All right. So yeah, back to this now. Seems haven't used the computer for a while, and the fan sort of froze up and that. So overheating issue. That's all right. I can sort of paste these two videos together. But look, where was I? Basically, sort of look. It gives us a chance to sort of see where the markets were at, um, and where our sort of like markings are sort of actually sort of how it sort of played out with it all. So let's have a look here, because almost a little bit of this, like if you disregard, I think the sort of drop down here, it's almost like a little bit of a sort of rising channel that we have seen through here, and obviously sort of coming into this top area here at the moment, that obviously provided quite a sort of strong sort of pushback down. That's three drives a little bit along here, not really a second drive here actually, maybe not three drives along the top here, but almost a little bit of this sort of expanding megaphone pattern, which I'm not a big fan of, but I have been seeing sort of pop up in a lot of things more recently. Um, though what we are sort of seeing here is a bit of this sort of falling support really sort of playing its part here, along with what could potentially, which for me lines up very well with this sort of channel moving up over here. It's coming into like, that confluence of support through here. Let's get this one out of the way. I would say this is a nice sort of last line for Aussie. Look, buy the dip has been the play for everything all the way through, and that even to my own detriment a little bit to sort of through this whole sort of grind recovery period here. But we have seen this thing absolutely take a walloping from this last sort of push up here. So where we get to 66.25, now back down, that's a 200-point drop off. Down to 64.25. We've got the confluence here. We've got this rising support. We've got this falling support coming both in around this level here. Market seems to be buying it a little bit off this, but should we see a little bit of a break from this area here, measured move, if this were to be, which I'm happy to sort of call this a bit of a channel through here, measured move off this would actually be quite sort of detrimental for Aussie and really probably see another 200-point sort of drop off back down over here. So let's put in a little price target over here. Look, it hasn't broken through yet, so you can't really sort of say, hey, look, this is definitely going to be hitting this zone here. But should this thing break, should this thing sort of come down, and I think really underneath 66, 63, 60s is probably a bit more where you could sort of see this thing confirm a bit more, which is obviously another 60 points or so, 70 points at this point, at this moment, drop off. Let's put that, and that's a measured move. Should this break to the downside over here, and this is what I was saying a moment ago. With like, if we see a continued push with US dollar strength through, like the next couple of months, because remember this thing known as the sort of wrecking ball, and once it starts moving, it's very hard to turn around, as we've seen in this downside move, where it has been unrelenting to the downside. And, likewise, it's spent a lot of time trying to sort of, regain its composure and actually sort of push back up. Once it starts to move up, I don't think it's about to sort of like, do all that effort to turn around and then just move up for a week or two. I would expect you probably see a month, 2 months, 3 months potentially. I mean, things change. Of course, there's always new sort of information and data and stuff happening all the time. But there's a chance that this thing could really sort of continue through. So, the idea that Aussie drops down another 200 points isn't off the cards. What I had been sort of saying was that I would like to get long at these levels, way back when. And I actually said it while we were around here, it's coming down and back up and blah, 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 all this kind of sort of stuff with it all. But if we come down through this level here, probably take out these lows will be your confirmation underneath, as I said, 63, sort of 70, 63, 60s. But from this level down under here, where we can see there was a bit of a horizontal, as I said, the 60s generally sort of seems to be a recurring number with Aussie. But if we get down underneath here, I think that's going to be your confirmation that we come a little bit lower down here. I was looking at a thing of a seasonal seasonal trends with Aussie as well. And second half of July, August, typically the worst months for Aussie. So, this thing could hold support here at the moment. I mean, we've seen it do it time and time again. So, it doesn't mean it's there yet. It's just something to prepare for and something to think that should this thing break and give up this sort of rising support through here, and sort of like, continue to see this move down here, Aussie can, once it gets moving, really continue quite strongly. I've excuse me, often said that sort of the market's favorite pastime is to sell Aussie. And we've seen this thing grind, 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 grind. But, while US dollar has been at sort of multi-year lows, Aussie has only been able to sort of get this little grind back up to 66, and then even then it just gets slammed down again. If we see US dollar run, Aussie, as I said a couple of times, is going to be first on the chopping block. So we'll see how this goes. Maybe we can get a little idea about what's happening here. Maybe this could be a little, hey, we're going to see a bigger bounce kind of line. Feel out of touch with using this program. Okay, let's put this yellow. Let's make it, put this thing over here. Make it to one. Bang. All right, so as you can see, sellers coming down over here. Look, any sort of bounce up into this sort of maybe coming up to around 50s or so. Could see another push down here. But I think these two lines here, this sort of falling support, this falling resistance, I think this is going to be your short-term break. So this will be a bigger one, but in a little short-term move, I think either here or above here will give us the next sort of idea of what the market's going to do. Because as you can see, sellers are pushing it down on this line. If they continue to do that, well, obviously it's going to force it to sort of break through this sort of falling support, this rising support, that confluence that I spoke about a second ago, and that's going to lead to a bigger move to the downside. Should they sort of buck the trend, and obviously the sellers are moving down here, but if they are unable to continue that, and obviously that'll be sort of shown by a break of this falling resistance, and we see some sort of bounce move back up over here, well, then you're kind of looking maybe that the channel is going to continue, and there's a chance that we sort of come up a little bit higher, back up over to these levels over here. Given that, if we could see US dollar sort of sell down a little bit, I don't think that's the plan. I think, obviously, as I said, I think US dollar is going to run. I think it's due. I think the data looks like it's sort of strong enough to sort of sustain the move. I think the tariff uncertainty is kind of waning a little bit on the market. And I think that, we could see US dollar run for a little bit. And so I'm prepared for a move down to these levels of 62 with Aussie. Obviously, you need these confirmations, but to me, it's coming down to a little bit of a point here, which will really sort of give us a bit more of the direction. Top side confirmation of this will be above 64.80, in my opinion, above this little swing high point over here. So I'll put a little line just through here. Probably say that one, message, recovery, bounce, through that sort of level through there. Yep, that's online there. So I would say sort of like, above sort of 64.80, okay, bang, we got a bit of recovery moving up over this side over here. So I'm going to put that up over there. Look, early indication obviously will be if it bucks the trend here, but you really, you can't just go, okay, just here's the falling trend line. It beats that, okay, it's out of the woods. No, you need to sort of get that confirmation that the horizontal buyers and sellers and that. So as you can see here, it's, this level, the 60s has always been a sort of reoccurring number. As it broke through here, bounced back up, sellers kind of stepped into this thing and pushed it down again. So you really want to get rid of these sort of sellers at this sort of 60s, 70s kind of level. So above 80 will be sort of more of a confirmation that you're going to see a recovery. But I think you're probably going to see this thing break and sort of move to the downside here. But, we've got NFP tonight. That's a perfect time for this thing to happen. If that number comes in strong, I would be looking for Aussie to sort of break through these levels and potentially push down a little bit lower. And possibly, as I said, if you break these larger sort of structures, the resulting moves are generally quite drastic. But we'll have to sort of, wait for that confirmation with that stuff there. So speaking of DXY, let's see how's it recovered through this period. Wow. This little last little push down over here. So just to sort of cover these things here, we got this big breakout. That's fine. I think this was CP. Excuse me, was it CPI? I think it was. Yeah, CPI. I can't remember exactly. But while I was away on the, I was actually flying. So I happened to book my flights and that sort of through US CPI, and then sort of returning was through Aussie CPI with FOMC at 4 a.m. the next morning as soon as I got back. So that was yeah, not really too much thought put into that sort of process there. But anyway, so we saw this thing moving up. That's great, great. Another little shakedown here, and it's just been on an absolute rip. So where was the bottom here? So last Thursday, and it really just hasn't looked back since. So it's really sort of coming back up to these levels. I think you must have, I mean, must have back down here. This was the kind of area, and this is what I talk about. So closing gaps. Gaps are always magnets. Yeah, I mean, it didn't like sort of really sort of it didn't regard these things as go, okay, that's it, that's a limit, but they did close, and this is what I say, they're always a good sort of target. If it doesn't close, like I've said this a few times, if it doesn't close straight away, like as in morning gap, close, and then on its way, it'll try through Europe or Euro sessions, and if it doesn't close through Euro session, so i.e. doesn't close on the day, then I'm generally sort of saying about 2 weeks for these gaps to close. And if we look at this now, how long did this take us? So 24th of June, 15th of June. So 3 weeks for this gap to close this top one here, 2 weeks for this bottom gap to close here. And this is what I've seen with DXY and its gap. So, that's why I was saying while we were down these periods here, I'd be sort of cautious because, this was, they still had those gaps and they're magnets. And as we saw, came back up close and bang. Anyway, so as I said, look, sell down here. It's been on a rip, moving up the top side over here. Look, I'm not an Elliott wave kind of person, but it's in this kind of like 1, 2, 3, 5, 4, 5, I don't know. We've probably got a little bit of sort of chilling around this area over here. Disregard that comment about Elliott wave because, as I said, I don't trade that stuff. So anyway, let's have a look at where the horizontals are here because, what we're seeing here is potentially some targets that we can look for topside moves. So back up 160 looks to be the next target. But your real big breakout, whoops, your big breakouts are going to come up over 101, call it 102. That was the big move there. So 99.4, that was our big one back over here. And here we go, break through. As I said, I haven't looked at these charts since I've been back, so I'm catching up at the same time that I'm talking about this. But 99.4 was that. That was the big weekly. If we chuck it back on a weekly, we can see that that was that big sort of level that we were looking for the other week. Where was it? Maybe this one here. And we saw this thing um, maybe it was this candle here where Bowman came out, or Muller or Buller or whatever the hell his name is, Waller came out and sort of said, oh yeah, we should cut in June, we should cut in June, cut in July, sorry. And then market just absolutely hammered it down off that kind of thing. But as you can see, this is a big weekly candle here. And when you see moves start to revert and start to reverse, these are the kind of moves you want to see. You don't want to see things just like, okay, start to move off and just dribble off. You want to see, bang, big candle to get things kick-started, and then it starts to move and grind. And this is what I'm talking about. This is the kind of move that we could potentially be seeing the start of with US dollar. I mean, this is not really a line at the top over here, but this is the bottom line here, the support here, and we 1, 2, 3, 4, 5, kind of 5 touches down on this bottom side over here. This line at the top here, I mean, yes, you could say maybe these two here, but not really. This is more just in place to sort of go, should this thing start to come up, where would people, obviously using this angle down here, be looking for this thing to move to? And, given a couple of weeks, moving a couple of months, whatever, we could be moving out to October here. We could see this move up to 106, 107. Now, not necessarily going to hit that level, we know that, but let's get back onto a daily sort of thing and sort of say, okay, look, if this was the sell down move through here, and say this is our top, this is our bottom, through the 23%, and we can start to look where could these things really start to move to. And, moving through here, we can say that, look, here's the 61%, and the horizontal over here, which gives you 104. Yeah, I mean, these are obviously targets of, okay, further up kind of thing. Well, these highs got a bit of zone up over here. Again, well, this is just forward thinking, but again, there's that October level, a bit of a confluence coming up over here. Anyway, look, we'll get to that when we get to that. What's tradable now and usable now, I would say, is a potential move if we're going to go higher, up to 160. If you get up to 160, I would expect that you're probably going to see some sell down. Like, this is where the market tried to sell it previously. It was obviously a bit of a support area through here as well. So you short term, that would be your target. You break through that, okay, well, you can deal with these 101, 102 kind of levels, but this thing does look pretty stretched out here if you have a look at this. And I'm not sort of saying that, okay, it's stretched out, it's going to come back down over here, but it needs a breather. That RSI doesn't look particularly great. This is on the 4 hour. If you look at this here, I mean, that doesn't look, there's an AD there. That doesn't look particularly great with this last move through. Well, I guess it's actually through that. Your last sort of move through here. So what I'm saying is that this move looks like it could be a little bit stretched. I mean, this is what, 1, 2, 3. This is the fourth 4 hour candle, butting heads at this level over here, which is 100. It's that big sort of mental barrier. These kind of things. It's not really sort of showing that it's really pumping with this RSI here either. So look, it's not to sort of say that it's definitely done, but I would expect, like we normally do with these sort of larger bits of data, a bit of a quiet session sort of leading into it, and then sort of see what the data shows with this. Look, expectation is a weaker number. So it's obviously probably going to see a little bit of a negative move on US dollar should that come in. If we do back the trend again, bang, on we go. But I would say any sort of pullback down into these levels over here, this 99.3, this sort of 99.6, these kind of zones here, I'd probably expect this almost to be bought up and sort of continue. I don't think this move is done. I don't think a weak NFP number is going to sort of rattle this. And we're going to see this thing sort of move to the downside. So sustainably move to the downside. I would say any sort of move down here is just going to be bought up and is going to be on with the show. But numbers are expected to be weak, so why would you buy US dollar into that necessarily? And by that I mean is in through this session today. So I would expect it's probably just to stall a little bit sort of through this session and probably not sort of see a great deal, wait for those numbers to sort of come out. All right, move along. We've got gold. Gold's been taking a little bit of a beating as well, it sort of seems. Which is the chart? All right, so where I did notice that we did get a bit of a bounce, like if we zoom out onto, this is our original sort of channel from way back. Was it this one here? No, gotta clean these things up a little. Yeah, to kind of top side of this channel, which we've really just sort of been consolidating at the top side of. I'm going to clear a couple of these charts just so I can get a bit of a better view. But look, we're coming into a little bit of this sort of horizontal here, if we can get a hold of that one. Horizontal here, and again, I think these things are at pivotal points, and I think they all flow, they're all going to sort of flow together. So if we see this sort of drop and come down through here, yeah, you've got this like last wick low that we had sort of when's this back in June, and of course, the other one sort of back in May, where excuse me, kind of ducked under this sort of 32.80 level, but then bought up, I think if we go underneath 32.60, I don't think these wicks are going to be enough to hold it, to be honest. I think this could actually be what's opening the door to this move finally to sort of come back down into 31 area. If we see US dollar run, that's going to be another factor for it. I do think that this is probably the time that we're going to see them rattle the cage of the gold longs a little bit, and sort of come back down into testing these sort of levels over here. It did have that sort of overshoot here, where I was looking back at 31.60, I think it was the level that I was looking at the time. And we can see that obviously it went down a little bit further, 31.20s and really just trapped a whole heap of people. But that was then, this is now. We're seeing that this level over here is obviously a nice 4 times it's tapped, it's held the top here. We've got a bit of a sort of range breaking through here. Measured move of a range is what gives you your price target. Price target coming down over to here. And look, again, even if you sort of look at this, this is the fib from October, November, I think it was, yeah, November push, going up over here, which saw this big, massive move up, of course, biggest we've ever seen. We're still only 23% from the highs. You know what I mean? If you pull back down here, well, this sort of last little sort of measured move comes right in at support of the 38% retracement as well. So it's still incredibly bullish, just sort of cooling things off a little bit. But for me, I think a move underneath 32.60 will probably sort of see at least another $100 move to the downside there. So I think sort of like, you'd be cautious about sort of buying gold necessarily at these levels if you're not looking for like a long term hold. Short-term trades, I think there's probably sort of more risk for a downside move in the short term. Silver, absolutely hammered here. Came up the top side, and now we're seeing it sort of come back into that sort of consolidation area, which was hanging around for a fair bit there. Had the big breakout, second effort, and then whack, it's sort of been coming back down here. So as again, look, I think this thing could be sort of in sort of false breakout kind of area. It pushed right up here, 39.50, very close there, and as we're seeing, it's coming back down now. Should we break out of that bottom? That's still the trade that I'm looking for. And look, I know this is crazy because it's it's been on such a rip, but this is the big wedge, and it's kind of like an overthrow, double sort of move to the top side here. It looked like it was going. It's funny actually. Like there's an old sort of saying that when the cab driver is giving you stock tips, that's the time to get out of the market. Well, I wasn't driving. I was catching an Uber in Waikiki, and the guy, I was chatting to the guy. He asked what I do, and anyway, he said, "Oh yeah, I've just got into trading gold." And I'm like, "All right, cool." And he showed me his thing. So he's got his little iPad or something set up while he's driving, and showing me and telling me about his RSIs and this kind of stuff. And just got into trading gold and silver. It's nearly at 40 and all this kind of thing. I can't remember what that was, but this would have been probably around here. No, I just think I find it funny because it's like this is the new modern day version of that thing. It's like that the cab driver's telling you stock tips. That's the time to get out. Well, when the Uber driver's telling you he's trading gold while he's driving, maybe that's the time to get out. And he's trading silver, and that's the time to get out. But yeah, anyway, I just thought I found that a little bit funny. Anyway, we'll see what happens. I think sort of again underneath 35, you wouldn't want to be long. I think that's sort of like a big horizontal level here. You'll get a reaction at this level, no doubt, because obviously it held so many times down here. But the fact that they tried to run it and it's been slapped so hard and back into this range. I mean, this is just what, 1, 2, 3, 4, 5, 6, 7, 8. This is 8 coming into its 8th session, pulling back from the highs here. As I said, it doesn't mean it's dead. It could definitely sort of rally back out of this area here. But as I said, I think again, same with gold, that the short-term trade, short-term being the next sort of month or so, puts the risk for a downside move here. So I wouldn't necessarily be going, okay, look, let's buy it at this point. It's back into the zone over here. Look, if you get back above sort of 37.50, all the best to you. And I think, look, that's the time you could see this thing regain a little bit. But at the moment, that looks like it wants to sort of come back down and test out the bottom side here. So that's, again, what I'd be looking for. And maybe it's just because I've got a bit of confirmation bias, but I'd like to buy it around 31, 32. So back around these zones down over here. So technically, you need to update this. But still, around that 31, 32, that's where I'd like to buy it. So, we'll see how this goes. Underneath 35, I think there's a probably fairly decent move to the downside in due course. China, back up above that 720. Again, one of those ones was looking like it was coming. Went up here, slapped down, like everything, took out all the lows, and it's just fired back up over here. 720 was the level, the trigger that I was looking for. We saw a nice little push through. We've seen a back test here. This is the time you want to see this thing move a little bit higher. Let's just put an alert above this one. And let's say high above 720. And that could be your back test and then continuation moving up over here. You are coming back into this big zone over here. This zone's like almost like a weekly level that held very strong for a long time. Should this thing sort of come back up and push through here. As I said, you still got that gap to close around here. It's 724. I think that'd be a decent sort of measure move price target. This is the wedge measured move as well. Takes you back up here, pretty much in line with this. It's just that this came all the way down here, retested the top side, and stop a whole bunch of people out. And this is what I was sort of saying, with these sort of falling angles, the back tests come back and can come deeper and deeper and deeper. But it seems to have been respecting the top side of that wedge. It's reacted quite well above 720. Go above wherever we put that alert, 7215, high there. I would say 724 is probably on the cards, and that's probably the target that we'd be looking for. Long copper. Oh, this is copper, yeah. This thing got absolutely demolished, and this is what I was saying in the start of the analysis, that look, this is a huge candle. This was like, well, 17% or something, I think this candle was. Where we at? There we go, 17%. And then you look at this smackdown here. I think it's 21% or something. 22%. Just insane. Look at it. This looks tiny now by comparison to this lot here. Again, look, you got to respect the size of that sell down there. That was massive. But we'll see how these things go, and that's obviously trying to sort of grind and find a little bit of resistance support around this area here. I'm going to wipe a lot of these charts and come at these things a little bit fresher. So maybe I'll do that sort of with the weekend analysis. I'm going to come back with a few different things too, just a weekly set of charts and then the daily set of charts. So I'm not actually sort of chopping and changing, because sometimes it's sort of like, you've got 3 charts that you're going through, and you may miss something because you're charted on one thing, marked out a level, and you happen to sort of skim over it on the other one. So that's just something for myself. And that, as I said, this was the point, to sort of get away, recharge, come back with a bit of a fresh outlook at things. So main thing here at the moment is just to sort of see what the reaction has been while I've been away. Has it respected? Well, obviously, when you see a move like this, it's not respecting any sort of levels. So that obviously got absolutely walloped down there. So look, it is sort of consolidating and trying to sort of put in a little bottom here, but it's not really sort of overly sort of confidence building that this thing's going to pounce back up. I mean, this is wiped out. Where are we going? Back down to, look at this. We had a bit of a horizontal through these levels here. This is going back down to April. So that's wiped out a lot in like one candle, a couple of candles there. So look, we'll see how that goes. And that is that I'll wipe these charts, come up with some fresh levels for it all as well. I think if you break through those levels, you're really kind of targeting these levels down here. And if I recall, that's actually probably gonna be, maybe I've got this on a weekly chart. I think we had a bit of a horizontal. Yeah, here we go. Yeah, so this is that horizontal that came in over here. So obviously sort of that sort of horizontal down here may sort of see some sort of reaction. The sort of 715, depending when it comes into it, if it does hit it now, if it does come in here. But should you come back down and retest this horizontal low, the rising support, but if you come back and test the horizontal low, that actually takes you through that rising support, which is not particularly great for it. So look, I think it should be able to shake it off. I mean, this is the big reaction. That's fine. A little bit of continued flow on, but I would say maybe if you get down in these levels, it's worth a shot, at least for a bit of a recovery push. But we'll have to sort of see how this one plays out as well. So quite a fair bit sort of going on with the charts there. I think I've covered everything that I normally do. So look, I'm going to wipe the charts, going to get back into sort of things, obviously have the sort of weekend analysis coming up this weekend, so I can really sort of go into things probably a little bit deeper and unpack a bit more. But NFP tonight's going to be the driver, so that's the one to watch out for. All right, that's it from me. Let's go.